Hi guys, welcome back to my YouTube channel. This is Raz, and in this video, we will talk about the guidelines and the mandatory requirements when filing the estate tax return or the BIR Form 1801. So if ready, let's start. So in this video, we will talk about the how, the who, the when, and where to file the estate tax return. So we'll begin with who shall file the estate tax return. So as we know, an estate tax is only payable when someone dies. Okay, so an estate tax is a tax imposed on the right to transfer inheritance or estate to another person by virtue of death. So there is no exchange, there is no consideration received on the part of the donor. It is freely transmitted to another person. And this transmission of properties only happens upon his death. Okay? So since the person here is already dead, then who shall file the estate tax return? So according to our existing regulations, the revenue regulations, the BIR Form 1801 or the estate tax return shall be filed in triplicate, meaning in 3 copies, by the executor or administrator or someone who is assigned to, settle the estate, or any of the legal heir or heirs of the decedent, whether resident or non-resident citizen of the Philippines, under any of the following situations. In all cases of transfer subject to estate tax. And also, regardless of the gross value of the estate, whether it's millions or only thousands or even billions, regardless of the value of the gross estate where the said estate consists of registered or registrable property such as real property, motor vehicle, shares of stock, or other similar property for which a clearance from the BIR is required as a condition precedent for the transfer of ownership thereof in the name of the transferee. If the decedent's or the deceased's gross estate includes properties which need to be transferred to another person, let's say for example you have real properties there, then that title of the property should be transferred to another person. But we know before we can transfer that to the heir or to another person, we need first to settle the estate tax regardless of the value of that property. Also, we need to file an estate tax return if there is no executor or administrator appointed, qualified, and acting within the Philippines. Then any person in actual or constructive possession of any property of the decedent. So in the first scenario, in the first instance, the executor or administrator or the heir should file or shall file the estate tax return. But in the case when there is no executor or there is no administrator assigned or qualified, then any person in actual or constructive possession of that property, then that person should also file the estate tax return, whether he or she is an heir or not. So when and where do we file and pay the estate tax return, the 1801? So again, the return, the 1801, shall be filed within 1 year from the decedent's death. So if the decedent died on, let's say, March 15, 2022, then on or before March 15, 2023, the estate tax return must have been filed already. Okay? To avoid penalties, of course, always remember within 1 year from the time of the decedent's death. In some cases, especially in meritorious cases, the commissioner shall have the authority to grant a reasonable extension not exceeding 30 days for the filing of the return. So for example, if after a year and the return has not yet been filed because of some rare, circumstance that really prohibits the heir or the executor from filing the estate tax return, then the commissioner, upon his approval, he may grant extension to the filing of that return within 30 days from the date when the return should have been filed. So that means after a year, it can be extended for another 30 days. Again, in meritorious case only, and it should be approved by the commissioner. The return shall be filed with any authorized agent bank or AAB of the Revenue District Office or RDO having jurisdiction over the place of domicile of the resident at the time of his death. So if the person dies in, let's say for example, Cavite, and then the RDO would be 54B, I think. But if the person died in Surigao, then that would be 105, RDO 105. So the return shall be filed to any AAB or bank within the jurisdiction of the RDO, having jurisdiction over the place of the domicile or residence of the resident at the time of his death. If the resident has no legal residence in the Philippines, the return shall be filed with the office of the commissioner, and that is at Revenue District Office Number 39 in South Quezon City. If the deceased is a foreigner, no legal residence in the Philippines, then the return should be filed with RDO number 39. Okay? In case of a non-resident decedent with executor or administrator in the Philippines, the return shall be filed with the AAB of the RDO where such executor or administrator is registered, or if not yet registered, at the place of domicile. And then, when the return is filed with an AAB, taxpayer must accomplish and submit prescribed deposit slip. Okay, when you file the return, there should be a deposit slip already that you have paid the estate tax return, which the bank teller shall machine validate as evidence that payment was received by the AAB. After you fill up the return, you will have to pay the corresponding estate tax through the agent, authorized agent bank or AAB. So submit your documents, the return, then have the bank teller give you a copy or a validated copy of the deposit slip as a proof of payment of the estate tax return, and then also let the bank teller or the receiving bank stamp the return the word received. Okay? The machine validation shall reflect the date of the payment, the amount paid in transaction code, the name of the bank, the branch code, the teller's code, and the teller's initial. So these are the important information that should be stamped on the validation slip. And a bank debit memo number and the date should be indicated in the return for taxpayers under the bank debit system. Payments may also be made through the e-payment channels of the AABs through either their online facility, credit, debit, or prepaid cards, and mobile payments. So yeah, you can use GCash actually, where the taxes are assessed by reason of negligence, intentional disregard of rules and regulations, or fraud even on the part of the taxpayer. No extension will be granted by the commissioner. After you file, after you submit the documents, you have to pay. You have to pay the estate tax due thereon. But in some cases, the payment of the estate tax may also be extended. As I've said, the filing of the return may be extended for 30 days. That's the filing of the return. And when you file the return, supposedly, ideally, you should pay the estate tax due. But for some cases, the commissioner may grant an extension of payment of the tax due. So when the commissioner finds that the payment on the due date of the estate tax or of any part thereof would impose undue hardship upon the estate or any of the heirs, he may extend the time for payment of such tax or any part thereof not to exceed 5 years in case the estate is settled through courts or judicial settlement. But if the estate is settled extrajudicially or outside of the court, then the extension can only be made for 2 years. So within 2 years after the due date. In such case, the amount in respect of which the extension is granted shall be paid on or before the date of expiration of the period of the extension, and the running of the statute of limitations for assessment shall also be suspended for the period of any such extension. Okay? And in case when the available cash of the estate is insufficient to pay the total estate tax due, payment by installment shall be allowed within 2 years from the statutory date for its payment without civil penalty and interest upon approved by the concerned BIR official. So again, when there is cash but it's insufficient, then installment of payment of estate tax due can be allowed or may be allowed, okay, and without civil penalty and interest. So what are these penalties? Okay, when we miss the deadline for filing and payment of the tax, we should know that there would be a corresponding penalty, even if it's only a day. For example, the due date should have been yesterday and you only realized to file the return today, then you will have to shoulder the penalties because you are given 1 year to file the estate tax and then you've missed a day. The following shall be imposed and collected as part of the tax. Number one, we have a surcharge of 25% of in the following situations. So basic surcharge 25%. That would be failure to file in return and pay the amount of tax or the installment due on or before the due date. So again, if within 1 year you fail to file the estate tax return and you fail to pay the tax, then you will incur a surcharge of 25% of the estate tax due. Suppose estate tax due is 100,000 and you filed a week later, then 25% of that, 25,000, will be added to the tax due. Okay, that's 1/4 of the tax already. And then also, filing a return with a person or office other than those with whom it is required to be filed, unless otherwise authorized by the commissioner. So, suppose the correct return should have been filed in RDO 54B in Cavite, but you filed the return in 54A. Or, you filed the return in 105 or in 77, RDO 77. Even if you will say, I have filed the correct tax, I have paid the tax, even if you will contest that out of those reasons, still you will have to be penalized because you're filing in the wrong RDO. Okay? And third scenario would be failure to pay the full or part of the amount of tax shown on the return, or the full amount of tax due for which no return is required to be filed on or before the due date. So, suppose you are given 2 years extension for payment because you ask for, extension through, extrajudicial settlement, and you were approved. You were given a chance to extend the payment, but you failed to pay the tax after 2 years or within 2 years. Then all that will also correspond to a penalty of 25%. Another scenario would be failure to pay the deficiency tax within the time prescribed for its payment in the notice of assessment. For example, if you declared by certain reason your estate tax due computed is 100,000, but per BIR computation it should have been 200,000. Therefore, there is a deficient amount of another 100,000 because you only pay 100,000, but upon BIR's assessment it should have been 200,000. Okay, so that means your tax is deficient by another 100,000, and now the BIR gives you an assessment that you should pay this 100,000 deficient tax on or before this date. And you failed, you ignored such demand. That means the deficiency tax there will now be also subject to a penalty. So aside from 25%, a surcharge of 50% of the tax or of the deficiency tax in case any payment has been made on the basis of such return before the discovery of falsity or fraud for each of the following violations. 25% was the, kumbaga, general rule, okay, no, the surcharge. But it could be 50% if you have committed any of the following, which are fraudulent or false return. So first, offense, willful neglect to file the return within the period prescribed by the code or by the rules and regulations. If you willfully neglect to file the return, you know when to file, you know that within 1 year, the estate tax return should have been filed already, but you willfully neglect that, then there will be a corresponding surcharge of 50% instead of 25%. Or in the case of a false or fraudulent return. So, for example, the gross estate should have been valued by 100 million, but you only declare 50 million. Only half of the gross value was declared. Therefore, that's fraudulent, very much fraudulent. So, instead of 25%, 50% surcharge. Aside from surcharge, also there will be a corresponding interest at the rate of double the legal interest, or as of now, we have 12% for loans set by the BSP from the date prescribed. So, aside from the surcharge of 25% or 50%, there will also be interest. Now, interest beginning from the date that the return should have been filed. So, that's 1 year, within 1 year. And then, until the date that the return was actually filed and the estate tax due has been paid. So, suppose the decedent's death falls on May 5, 2022. So therefore, you should file the return on or before May 5, 2023. And you only file, let's say, on June 5, 2023. So that's 1 month after the deadline. Okay? And there's no approval. There's no extension for filing because probably the reason is not meritorious. Then, aside from the surcharge of 25%, if it's not fraudulent, there will be another another imposition of interest of 12%. So that's 1 month interest. So syempre, it's the interest computed only as in a simple interest method. So that's the tax due times 12% times 1/12. Okay? So make sure that when you are filing as a tax return, you should know when the deadline is and how much or what will be the corresponding penalties if you file late, okay, or if you pay late. And finally, we have compromise penalty. Compromise penalties are imposed on as a compromise penalty because syempre it's our legal obligation to pay taxes and you fail to file the tax. That's a criminal offense, right? So, to settle na lang na wala na lang kasuhan, so we enter into compromise na lang. Napenaltihan ka na lang ng compromise penalty. So, here are the mandatory requirements when you filed as a tax return. So, you should bring the original copy and additional 2 copies of each of the following documents. So, number 1, certified true copy of death certificate and then taxpayer identification number of the decedent and the heirs, TIN, and then notice of death. So this notice of death applies only for death prior to January 1, 2018. So if death happens before January 1, so that's December 31, 2017, and dates before that, so notice of death is necessary. Okay? Again, if death happens after December 31, 2017, the notice of death is no longer necessary. Also, you should bring the original copy of any of the following: affidavit of self-adjudication, so this is for the heir, and deed of extrajudicial settlement of the estate if the estate has been settled extrajudicially, meaning there's no court settlement, okay, outside of the court settlement rather. And then also, if the estate is settled judicially or through the courts rather, the court order is necessary for that. Okay? So either deed of extrajudicial settlement or court order. And then also sworn declaration of all properties of the estate. This should be notarized, by the way. And then a certified copy of the schedule of partition and the order of the court approving the same within 30 days after the promulgation of such order in case of judicial settlement. So again, if the estate is settled through courts, then there should be a certified copy of schedule of partition. Also, the validated return. When you submit the return, syempre, tapos na yung return na fill up mo na. And it should have been validated by the bank already. So, the validated return with a stamp received, and then the OR, the official receipt or deposit slip or validated slip, and as a proof of payment. And for no payment return, only a copy of acknowledgement receipt of return filed through BIR forms. And then also proof of claim tax credit when the decedent has properties outside of the Philippines and the estate there outside paid estate taxes abroad, then proof of claim tax credit is also necessary. And then also a CPA statement on the itemized assets of the decedent, itemized deductions from the gross estate, and the amount due if the gross value of the estate exceeds 5 million pesos. So that's on or after January 1, 2018. But before that, that's 2 million only. So if the gross estates, if the gross value of all properties subject to or added to the gross estate is 5 million or over, then you will need a CPA statement or certification from a certified public accountant. So also we have certification of the barangay captain for the claimed family home. So again, if you are a resident citizen and then you are claiming a family home, you should have a certification from the barangay captain about, regarding the family home, that you really are residing in there. And if the family home is conjugal property and does not exceed 10 million, the allowable deduction is only 1/2 of the amount. And I have a discussion for this family home in another video. I will link that video here. Also, duly notarized promissory note for claims against the estate arising from the contract of loan. So if the decedent has unpaid obligations, has unpaid debts, liabilities, we need to have a notarized promissory note for that contract of loan. Okay? And also, we need an accounting of the proceeds of loan contracted within 3 years prior to death. So for example, the decedent died in the year 2022, therefore whatever loans contracted within 3 years before his death, so that's 2019 to 2022, if there is or any loan incurred, then there should be an accounting of the proceeds of the loan. Also, we need a proof claimed of property previously taxed. If you are claiming vanishing deduction, then we need to provide evidence to provide proof that there is a property included in the gross estate that is subject to the vanishing deduction. Finally, proof of the claim transfer for public use. So if there is or are properties included in the gross estate which are donated to, for public use, no? So we will need a proof of that donation or transfer. So these requirements are necessary when the estate has real properties. So certified true copies of transfer, original, or condominium certificate, TCT or CCT, if applicable. Okay? And then also certified true copy of tax declaration of real properties at the time of death, if applicable. And then certificate of no improvement issued by the assessor's office where declared properties have no improvement. And then for personal properties, if any, we will need the original copy of certificate of deposit, investment, indebtedness owned by the decedent and the surviving spouse, if applicable. So if the deceased has, bank account, savings account in a bank, so we will need a certificate of deposit. Also, the certificate of registration or CR of vehicles and other proof showing the correct value of the same property. We will also need proof of valuation for shares of stocks at the time of death. So if the deceased has shares of stocks, we will need proof of valuation. Okay? So for shares of stock not listed, not traded in the local stock exchange, we will need the audited financial statement of the issuing corporation nearest to the date of death of the decedent with computation of the book value per share. And for shares listed in the stock exchange, we will need the closing price or closing rate on a time of death, or the closing rate nearest to the date of death. And for club shares, we will need transaction value on the date of death or the nearest date of death as published in the newspaper. Okay? And then, for certificate of stocks, we will need the certificate itself and proof of the valuation of other types of personal property if applicable. And here are some other additional requirements aside from those mentioned. So we will need duly notarized original SPA. So if the transacting person is not the heir but someone who is just authorized as an agent, so we will need an SPA, notarized SPA. Also, we will need certification from the Philippine consulate if the document is executed abroad. And then also the location plan, vicinity map, if zonal value cannot be readily available or determined from the document submitted. We will also need certificate of exemption, BIR ruling issued by the commissioner. So if you are an executor or an heir and you are saying that you are claiming that these properties are exempted from estate tax, then you will need a certificate of exemption or any BIR ruling or regulation that says that these properties are really exempted from the tax, if tax exempt. Okay, you will also need BIR approved request for partial disposition of the estate, and of course such other documents may be required by the law, rulings, regulations, and etc. So those are the things that you need to know when filing an estate tax return, and you will also need to bring all those documents, requirements needed when filing the estate tax. I think that's it for today, and if you like this video, give me a thumbs up, and if you are new to this channel, please subscribe and click the notification bell so you'll be notified whenever I will upload new videos. Bye!